Hey guys, this is week 10 of day trading in Forex currency markets. This week has been crazy because of the volatility in the market. Coronavirus has been a big impact on not only the stock market, causing it to plummet another 4 to 5%, but also the currency market where we're experiencing high amounts of volatility. Unprecedented amounts. We haven't seen such a volatility ever since 2008, and so this was something that was brand new, that wasn't modeled into the strategy that I built. And so this was a great opportunity for me to really test it out and see how the strategy worked in the long term. Now, this would be my last week here in San Diego. It's been 10 weeks since I was here, since the 6th of January. Actually, if you consider a week earlier, it would be 12 weeks. No, sorry, 11 weeks to 12 weeks. So that is a hard thing to do, being able to post trading videos for 11 straight weeks, even though you're losing, but you're showing accountability in the long term. I just want to say thank you so much for people who followed my journey, even though I got zero views right now, absolutely zero. No one cares about it, but I don't mind. I mean, this is something that I've really been passionate about, and I've always really identified and asked myself this question. And you guys should do that too. Don't do something that you're passionate just because you can get other people impressed. Instead, you want to find something that you will do regardless of whatever recognition you may get. So if you find something that you do it and you absolutely love it and you would do it even though you have zero recognition from other people, go ahead, because that should be what you're supposed to do. It's not, you shouldn't be driven by external circumstances, people's opinion. Instead, be driven by your internal, wants and needs. And that's how all successful people think. And so I just want to bring this review to you guys. Last review here in San Diego. Next week, I'm going back to Hong Kong, which is where I was born and raised in, and where I'm going to also be meeting my old friends. But before that, if you guys don't know, self quarantine for 14 days is in effect. So once I get back to Hong Kong, I have to lock myself in my room for 14 days, which is, well, for the benefit of everyone there. So without further ado, stay tuned and let's get straight into the video.
Okay, so as you can see right here, I only took two trades this week, one on the 17th and one on the 19th. It was really difficult to be able to catch trades because of the current volatility. Think about it. Our price take profit and stop loss is around 10 pips, but price movement averages around 20 pips every 30 minutes. And so the range is just too big for us to get into low risk entries. And so this week I've been a little more conservative on the safe side because of the volatility and also because of the previous week's bad trades, bad decisions that I've made. There were a lot of impulsiveness that went into previous trades, and so that's why I want to be able to limit the amount of trades I take and focus on only the high quality ones. So let's look at the first trade that we took on the 17th of March, which is the US dollar Swiss franc. So we got in the US dollar Swiss franc for a short at 0.96439. So if we look at the US dollar Swiss franc, we see that there's a blue line right here. Now, the blue line was actually a indicator for us to get in. So if we zoom back to the past, when that blue line was drawn. It was drawn right at this level. Right at this level. You see that prices were going sideways from here, and then it tanked with a aggressive selling action. So by using the volume profile indicator, what we can identify is the strongest amount of volume that was present during this sideways movement. Now, I couldn't extend my graph. Let's see if I could extend the amount of days that it shows. Data series, load days to 30 days. Let's apply that. Okay, so let's go back. So if we can see right here, there was a sideways price action going on before a massive aggressive selling price action. So this is a typical volume accumulation setup, and we draw a volume accumulation um, region right here. Now, according to this volume profile, the strongest volume is presented right here, right? However, if we during that time, um, the greatest volume was drawn at this blue line. The reason why it differs right now is because the volume profile indicator actually makes calculations based on previous data as well as newly formed data. So it always updates itself and gets more and more accurate over time the more you use it. So based on the previous volume accumulation charts and the volume profile indicator, we saw a huge amount of volume presented at 0.967438, around this area. What does this mean? We see aggressive sell-off right here. So this goes to show that institutions were aggressively adding to their selling positions right here. And so when prices come back up, they have to defend their selling position in order to make a profit. So it took us around 20 days before the price went back to this level, touched it perfectly before making a downward turn of more than 60 pips, 80 pips, sorry. Think about the amount of money you could have made using this strategy. Uh, However, I took a small loss on this one, and the reason is very simple. I took a $12 loss because if we look at the 15-minute chart, when prices touches this level and comes down, I moved my stop loss to the break even level, which I shouldn't have done because based on my strategy, it should have been 1 pip above the reaction point, which is the high of this level. So it should have been right here, my stop loss. However, I moved my stop loss to the lower blue line, and as prices retest this level, which was the entry point, I got stopped out. But in reality, a profit would have been, waiting for me in the next 30 to 1 hour, 30 minutes to 1 hour. So this was a losing trade, but a right trade because of the poor risk management and the poor stop loss movement. We got stopped out. However, this is a proof that the strategy works. The next trade we want to take a look at is on the US dollar Japanese yen. Now, this is a level that was way, way before on the February the 24th. So if we go all the way back to February 24th, right here, you see there's a similar price action compared to the US dollar Swiss franc, aggressive sell off. And by drawing a volume profile indicator, we can find out the greatest amount of volume is presented right here at this level, 1100 111. How do you say this? 1101.31, right here. Now we know this is a strong level, so after almost a month's time, which is a month of day trading, which is a very, very long time, prices went back to this level and tested it perfectly before turning downwards from here, from 30 all the way to 30. That's almost 100 pips. If you held that, you would have made a fortune, right? You would have made 30% off your original investment. So I only took a 10 pip take profit right here, and at the same time moved my stop loss to the 1 pip above the reaction point, which made us a winner for 184 bucks. So in total, it was a win. It was a solid week. We're gonna head off next week a lot stronger. Since I'm going back to Hong Kong with the time difference, it will be easier to take trades because most of the trades will happen when I'm awake. Most of the trades that is happening here in San Diego is when I'm asleep. So oftentimes I won't have the time to manage them. But right now, it's the perfect time for me to work on my trading and continue to go back to my break-even amount in my account and starting to make profits, because throughout this whole journey, 3 months journey, my equity curve has been going sideways. And my mentor always said this, it was really, really important, and that was when you start off trading with real money, with real money, when you're putting your savings in, the amount of stress, the amount of tension, can be overwhelming. And that was the case for me. It was overwhelming for the last 10 to 12 weeks. But I managed to push through that emotional barrier. And once you get through that emotional barrier, once you're able to separate money from emotions, now you are able to start and prosper. So I believe I've already gone through the survival period of 3 months, you know, on a freaking dry spell on trading with no results. When we get back to Hong Kong, we're gonna crush it. We're gonna do better, and we're gonna make history. Okay. So let's see you guys next week. I hope you guys enjoyed this video. Like, subscribe, comment, ask me questions on YouTube. I would be willing to answer all of your questions, and hope to see you guys soon. Peace out.